What's up everyone, it's Karthik with MoneyVest. Welcome on board for our market open live stream. Hope you all are doing great as the markets once again takes a turn to the downside as we're seeing markets S&P 500 down over 1%. The NASDAQ 100, so QQQs are down over 1.5% at the moment as Nvidia stock down almost 2% and Tesla back under $400. As it is down over 1.6% as crude oil having one of the biggest jumps here, up over 10%, trading up to over $87 a barrel. As I mentioned before, volatility is on the rise here, 14.7%, trading up to over 27. I talked about this in my yesterday's video. The markets are, in my opinion, underestimating and downplaying the risks related to an escalation, which is what we are seeing as we head into day number 7. So it's been 1 week since the war in the Middle East broke out. And it's also undermining inflation risk at the moment as well, as oil prices jump over 10%, trading up to over $86, $87 a barrel to their highest levels since April 2024. So we're basically seeing a 2-year high on crude oil, and again, this entire week it's up over 29%, and in the month of March alone it's up over 29%. So absolutely incredible amounts of momentum coming in for oil, for energy, and as a result we're seeing some volatility also elevated once again, pushing up over 13% right now. So hope you all are doing great. And again, welcome on board. Unemployment numbers just came out. We actually lost jobs in the month of February. So we actually saw 92,000 jobs lost in the month of February here. And unemployment rate actually increased to 4.4%. Technically, we are actually at 4.45. So we're kind of rounding up 4.5%. But the reported numbers are at 4.4% at the moment. So that's where we are. So if you go over to our MoneyVest platform, again, I'm going to be quite interested to see where the MoneyVest index opens up once the market opens here, as today looks like it's going to be another one of those days full of fireworks. But from an economic calendar standpoint, again, we saw 92,000 jobs lost in the month of February. So we're going to just pinpoint that number. So that right there, boom, is a negative 92,000. And the unemployment rate came in at 4.4%, estimated 4.3%. We are seeing a little bit of an increase in both unemployment and job losses at the same time. So yeah, that if market needed another reason to go down, that was more fuel to the fire. And as a result, the NASDAQ 100 down about 1.5%. At the moment. So once again, thank you so much for joining, everyone. Welcome on board. I misread the numbers, thought the dash was a dash, not a negative sign, and it was an emotional 3 seconds of roller coaster. Yeah, I mean, we actually saw jobs lost in the month of February. Is it me, or can you go 720? 720 for what exactly? Is it some kind of index, Big Beard, or is it some kind of stock? What are we talking about in terms of 720? But coming back over to oil, I think this is going to be the most important trade for 2026 because the energy sector is such a central piece to the entire puzzle of what's going on in the world right now. And where oil goes, it's really what's going to dictate where inflation and where interest rates and where the market goes. I don't think that we can underestimate the power of the energy markets and their impact on equities. Because at the end of the day, like I said, if oil stays high, which it is right now at a 2-year high, we're at a 2-year high for crude oil at the moment. If it continues to push up, and there are some predictions saying that we're going to get up to over $95 to $100 a barrel. I mean, $100 a barrel is going to put us to the highest levels since July 2022. So we're going to be hitting a 4-year high if you get up to over $100 a barrel, which is going to impact energy prices across the world, gas prices at the pump, natural gas prices, petrol, fuel, jet fuel, transportation costs, last mile delivery cost, everything is going to be on the rise. Inflation is going to be moving higher, and that's one of the big reasons why interest rate expectations are back on the table when it comes to rate hikes. Even though the probability right now is at 0%, so markets are still expecting rate cuts in 2026, at least one rate cut in September. We got the Fed meeting in 2 weeks. We're going to listen to what Jerome Powell has to say, what the chairman of the Fed, what other FOMC members have to say in regards to where the markets are headed, where interest rates are going. But I think this is a pretty big risk for the entire market right now. Volatility is on the rise again, trading back up to over 27. So up another 14% at the moment as markets right now continue to destabilize. And pre-market, we're seeing pretty red at the moment. So this is what it looks like. I mean, at one point we were doing pretty well. We were green, but right now it's back down. I mean, ASML is down almost 5%. We got BITX, BMNR down over 4%. Robinhood's down over 3.3%. IREN is down. SoFi is down over 2.9%, almost 3%. Oscar, we got Nvidia down over 1.8%, almost 2%. AMD is down over 2%. SMH is down over 2.5%. Oscar is down 2.5%. PayPal, Tesla, Google, Amazon, Palantir, Meta, Grab, SPY, nothing is going to be spared at the moment. The one sector that is going to be doing well is, of course, energy. So XLE is up another 1.5% pre-market right now, trading up back to near all-time highs as it has seen a monstrous rally since the beginning of this year, since the end of last year, really. It's gone up over 32%. So far, year-to-date, energy is still leading this market. At the moment, of course, along with utilities, staples, defensives are also the ones that are pushing higher. Technology has been hurt the most so far. So once again, welcome. That was a quick roundup on what has been happening here. And is it too late to buy US oil? I mean, it's already moved up a lot. I mean, it's up 30% plus this month. And if you compare it to where we were towards the end of last year, from $55, crude oil is up over 56%. So just in a matter of 3 months, crude oil has gone up almost 60% higher. Is it too late, you ask? I do think that if there is no de-escalation talks, and again, I'm literally monitoring the situation closely because, look, I'll be very honest with you guys. I'll be super objective about things because I'm heavily invested. So it's in my best interest to evaluate the situation as best as I can. And I do think that this is a risky situation. I'm not going to downplay this because I do think that any kind of escalation. Now there's about, I think last time I checked, there's about 19 countries that are involved in this mess at the moment, right? I'm not going to name all of them. Most of them are in the Gulf states, but there's about 19. Of course, 4 in Europe also getting involved. So the more escalation we see, the worse the situation gets because there are no winners. At the end of the day, there are no winners in this. There's only losers. And the question is, who's going to lose less? That's it. And so we have to, like I said, monitor very closely. We have to evaluate. And I'm, for one, constantly, even in our Discord, hoping and praying for de-escalation. We want de-escalation. We want ceasefires. We want negotiations. We want literally missiles to stop. That is what we want to see because, as I said, in this environment, there will be no winners, only losers, because that's what escalation leads to. Things only go downhill from there. And so that's my honest opinion, and that's why I'm tracking all kinds of markets, whether it's commodity markets, oil, gold, silver. So commodities is very important. The real estate cycles, interest rates, bonds, risk profiles for a lot of different kinds of asset classes is going to shift. Insurance premiums, that's a huge market that we haven't even talked about because it's getting more and more challenging for insurance writers to actually secure or essentially provide insurance to shipping companies, right? So if insurance premiums jump 3 times, 4 times, 5 times because of all the ships that are being stuck on either side of the Strait of Hormuz, that is another big thing because financially it starts to deteriorate the overall landscape, right? And global trade starts to get halted. And as a result, it affects monetary policy, fiscal policy, interest rates, inflation, and eventually equity markets as well. So very, very important stuff. I mean, I'm reading and researching pretty much 12 hours a day, trying to get as much information and understand the whole situation to try to make sense of it. But a lot of it depends on the conversations, the talks happening between these countries. And I don't think the US and Iran are even talking to each other right now. Listened to a couple different interviews from the foreign minister of Iran, the professor in Iran, and they've only really just said that we're ready to fight till the end of the day. And I don't think the US is even considering any kind of de-escalation or ceasefire talks. So, I mean, yeah, that's where we are. So, like I said, I mean, markets are going to be slow to react to this. Because if it goes on for long, if it's going to take another few weeks, months, hopefully not years, but the longer this goes on, the more problematic this becomes. But our job as investors to constantly evaluate and monitor the situation. Anyway, so let's come back to individual stocks. Let's come back to what's going on here from a stock perspective. So, Rick, in times like this, should we still take small trades? Like I could do a covered call on SoFi, expiring March 27th, strike 22 for a small premium, or should I just wait? I think you should still consider taking trades regardless of the macro events unfolding. Yes, it's something that we have to keep close tabs on, but from a micro perspective, if the stock and the trade makes sense, if the risk reward is good, I would take that trade. So that's why I sold calls on Palantir, I sold calls on Robinhood, I sold calls on Iron. So I'm not shying away from selling options right now, collecting premium to keep raising my cash exposure, to then reinvest it back into better opportunities if I see them, or just keep cash on the sidelines. So one of those two things is going to happen, right? So whatever premiums I do generate, either that gets reinvested back into more shares. Like I talked about SoFi earlier in the Discord, that my plan is, I want to pick up another 600 shares of SoFi. I might pace myself a little bit. I might pick up another couple hundred shares this week or next week, and then pick up more shares as the stock keeps selling off. But either that, or I'm just going to stay in cash, waiting for even better opportunities. So, Zine, yeah, did you get out of Dubai? So, yeah, I already had a flight booked for February 28th, right 15 minutes before the war broke out. So, I had the most crazy experience. We were ready for takeoff. We were already on the runway, pretty much doing taxi. And then the news came out that, U.S. has attacked Iran, and airspace basically closed down within 15 minutes of that news coming out. And we literally had to sit in the plane. And so I was able to rebook early because of the original flight that I had. So Emirates was kind enough to do that. And then yeah, I've been back in India ever since. But yes, evaluating everything. I mean, Qatar, Saudi, Bahrain, Kuwait, UAE, pretty much all countries have been entangled in this mess right now. So yeah, Stefan says, I hope for peace. We don't want war, 100%. Stay strong, sleep well. Thank you so much. Our prayers are with you, all of you. God bless all for quick resolution to end this. I agree. Couldn't agree more. I think that's pretty much the broader consensus. Nobody wants to experience all of this. This is crazy. Not sure why cover calls on SoFi, especially with the S&P 500 inclusion after close today. So yes, I mean, it may or may not happen, right? So we don't know if this is going to get included or not. But as I said, even if it doesn't, that is still, it doesn't take away from the fact that SoFi in itself is a great company, fantastic business. Anthony Noto picked up about $1 million worth of shares. That's another vote of confidence from the CEO himself, and I will continue to pick up more shares at better prices, right? So picked up, some covered calls. I've got 12 covered calls at $25 that are still out of the money, that are up like 70% plus. So I will close those out very soon at over 85, close to 90% profit, and then open new ones to collect even more premium from the SoFi shares that I have. And the plan is to pick up more shares, as I mentioned earlier. Now, Bitcoin and Ethereum also dropping. Ethereum's back down to under 2,100, so down over 2.5%. Bitcoin is also trading back under $70,000, so down about 2.5% at the moment. So Bitcoin, Ethereum, I think gold and silver. Let's take a look. They're also pulling back slightly. So trading just over $5,100 right now. And silver is just trading under $83 per ounce at the moment. So that's where we are. Yeah, gold, silver is slightly down. Bitcoin, Ether down a lot. And then individual stocks and, of course, equities are also pulling back. I still think that buyers will intraday step in. We're down about 1.5%. I think markets are still seeing that as an opportunity to dollar cost average and buy. That's totally fair. But two things that are just not stopping right now as I'm live streaming right now is oil and VIX. They're both pretty bold indicators for market uncertainty. Volatility for one, trading back at the same level as it was on Tuesday. So earlier this week, getting back up to almost 28. And we got crude oil up over 11% today. 11%. If you do very simple math on the biggest day for oil, I can probably do that right now. Let me just do that. We're going to go back to as far as 2022. I'm curious. That's all it is. So I'm just going to try to figure out the biggest day that oil has seen. Let's see if we can, okay. There we go. Got a lot of spreadsheets, but I'm really curious on what's been the biggest day for oil, and we're going back as far as 2018. Let's see. All right, so we're just gonna do this minus this divided by this, looking at a 2.4%, and then we're gonna circle all the way down. So today, of course, 11%. Max, we're looking at just going to do percentage change and then just create like a table. Let's see. There we go. I'm just gonna put it by ascending. I'm gonna ignore. Yeah, looks like 11% is one of the biggest days for crude oil, going back as far as at least 3 to 4 years. Some data might be missing. That's one of the reasons why it's having this issue. But yeah, see, there's one really odd close at 9 pennies. That's why it's distorting all this data. But it does seem to have 19% back on April 23rd, 2020, which makes a lot of sense during COVID. Then we had 15%, 19%, but we haven't quite seen an 11% move in crude oil, at least in the last 3 to 4 years, which is a pretty substantial number in itself. So this time the VIX is full of green candles so far. We'll go higher market open, I guess. VIX over 27. I see your charts with CHOCH. Do you draw them yourself, or is there an indicator for it? What is that exactly, Jonathan? Like, what are you asking there? What kind of indicator is that? If you see the market breadth, the beaten stocks on weekly RSI bottoms, all of them bounce irrespective of war, like SoFi, Microsoft, Coin, Palantir, Netflix, Hood. Even indices went up and down. So yeah, I mean, they are oversold. That's one of the reasons why we're getting a little bit of a bounce intraday. But as I said, I think if oil keeps pushing higher, if volatility stays up, getting up to almost 28 right now. So again, if you come back over to the volatility dashboard, we were at 80 percentile up until yesterday. If the VIX keeps pushing up to 90th percentile or higher, that's going to create better opportunities for sure. But then the question then becomes, how much further, right? 87 percentile is where we are. So 87 percentile, just under 27, as volatility jumps over 17.5%, trading up to almost 28 right now, with crude oil prices over 11% higher at the moment. That's why there were parts of the U.S. That had lines at the gas pump Is that really, Kevin? Is that true? Like I saw that here in India, people were just like queuing up for for gas, like for petrol, because they thought that prices were gonna jump like 2 times, 3 times, and it may not be twice or 3 times, but it is going to certainly see a jump in overall prices. It is a smart money concept indicator. So I only have the L3 banker oscillator here. I've got the Fibonacci's, of course, the RSI, the MACD, and then a couple other indicators, support, resistance levels, and then a few other ones that I'm actually working on with one of our members that we're going to most likely make it live very soon. But this is, again, a lot of capital accumulation, prime entry zones, buy and sell signals. So that is something that I also have access to right now. But that's it. Oh, the oil chart. Oh, yeah, that's also an indicator right there. I think it's also available on their Lux Algo Smart Money Concepts. Yeah, so that is going to be on TradingView as well. That's what I heard. Didn't see it with my own eyes, but I wouldn't be surprised. I agree. How does the war impact the dollar and the U.S. bonds? I think that's a great question. I think it really depends on the overall risk appetite for investors. Because one of the big questions is petrodollars, right? I mean, that's the big question. Like, one of the biggest, most important commodities, oil, trades in US dollars, right? So US dollar has its reserve currency in the world, has its dominance, its leadership, because a lot of countries want to trade in US dollars. But if that starts to kind of dwindle, if other countries start to trade in other currencies, other local currencies, or any other form of payment, obviously the demand for US dollar starts to go down, and it starts to lose its relevance. That's been one of the biggest case points for the devaluation of the dollar and how it's going to lose its position as a reserve currency of the world. But the US bond market, very much tied to interest rates. Interest rates, if they start to go up, bond prices come down. And why would interest rates go up if there's a threat for higher inflation? Why would inflation go up if there's threat to crude oil prices going up? Why would crude oil prices go up if there are supply disruptions? Why would there be supply disruptions if there is war that's ongoing? So if this continues, if there's escalation, if there's more supply disruptions, more trade disruptions, it's not just going to be oil, it's going to be other commodities as well that start to move higher, kind of follow on suite with crude, which obviously leads to higher potential inflation, which leads to higher interest rates to curb inflation, and then bond prices absolutely collapse because they are inversely correlated to interest rates. So, chopper or copper, you mean? So copper we've already discussed, I think, in our previous videos. I like copper, but I think copper is structurally more in supply as compared to silver. So I'm very bullish on silver for the long term. I think if there's one commodity that I absolutely love, gold and silver, I would put them at the same level, but I think long-term silver has more potential upside compared to gold, even though I believe that both of them are going to be higher. But I do think silver has more upside because it's been in deficit over the last 5 years, right? So I've done a video on silver, quite a detailed video on that. And it's not only got a investor appeal, but it's also got a lot of industrial demand that's coming in, especially with the rise of AI and data centers and battery technology and semiconductors and whatnot. So that's why I do like silver more than any other commodity out there. So okay, so any other stock questions related to markets? Let's cover them. We got another 20 minutes until market opens. But watch for volatility. I think we just hit a high, 28.25. It's higher than where we were on Tuesday, 28.15. It's at the same level as back in November of last year. So volatility just hit its highest level since November last year. And of course, crude also sitting at just over 87, just under $88 a barrel right now. So crude on the move, volatility on the move, and risk assets pulling back as QQQ, SPY, Bitcoin, and Ether continue to roll back. Yeah, let's do a poll on SoFi's inclusion in the S&P 500. Let's do this poll. Let's see what people have to say. Gush ETF, is it too late? So we can take a look at that here. Hello from Athens, Greece. Any thoughts on Hood moving down pre-market? So we'll take a look at that as well. Athens, Greece. I think that's how you correctly say it. What about copper? All electric cables are made of copper. Yes, so I just talked about copper earlier. Take a look at JP Morgan. I think it's hitting some pretty good levels. So yes, JP Morgan is actually part of the shopping list. It is part of our list of stocks that I've analyzed. I've included it in the shopping list. I've put down the fair value, the buy targets as well. Srinivas, hi Kat, you came to India. How are you doing? Doing well overall, but just really hoping for de-escalation, honestly. Because the last thing I want is world war basically kind of escalate and get out of hand as more and more countries start to get involved. So the last thing is that we don't want that. So we want de-escalation, we want ceasefire, we want more negotiation. Okay, probably going to pick up some TQQQ before close to hold for a weekend in case of some good news time off. So I like the leverage trades. I do like it. To be honest, I've been thinking about it as well. I've been thinking about two, TQQQ and SOXL. So those are going to be the two at the top of the list for potential trades for sure. But I just feel like it might be a bit too early because NASDAQ is not even in a correction and it's only down 21%, which from a leveraged ETF perspective, it is actually quite nothing. And so SOXL from its all-time highs is down over 30%. And so yes, I do like this idea for a leverage trade for sure. I'm actually considering it myself for a trade, but I'm just trying to understand if the risk of buying right now is greater or less than the risk of waiting. If the risk of waiting is greater than the risk of buying, then yes, I would be buying. But I feel the risk of waiting is not more than the risk of buying right now. So I just have to kind of weigh in those two. Kevin, do you have a list of tickers you're watching like an eagle right now? I'm talking like top 3, not just a shopping list. I think it's going to be crude oil. I'm watching for, like, this is the number one thing that I'm paying attention to. I haven't spent so much time on this chart over the last couple of years that I have in the last 2 weeks. I'll be very honest. Like, I haven't even spent much time on my main chart on this 4-split screen because I honestly, I don't care about where the markets go right now, the QQQ and the S&P, because they've just been consolidating and they've been kind of drifting downside. The only two things that I'm watching like a hawk right now is volatility. So watching VIX, watching crude oil, and then probably some other things related to the activity levels for the Strait of Hormuz. How many ships are actually passing by each day? Activity levels at DXB airport. How many flights are taking off? Like things like those, I think are good quantifiable data points for us to try to sense where we are headed. I think it's going to be a much better indicator. So those are things that I'm watching. But of course, shopping lists is for stocks. The macros are for, looking at the MoneyVest index and trying to figure out, okay, S&P 500, NASDAQ support resistance levels. I think that's great. But I think I've been spending a lot of time looking at crude oil, and then volatility and other really important metrics as well. So, okay, so let's come back to Gush. I know Gush is an ETF for long oil. I think it's a little bit more on the leveraged side, if I'm not mistaken. So 2x bullish ETF on oil and gas. Again, you asked the question if it's too late. I mean, it's already up 78%, and your underlying indicator is going to be crude. It's going to be natural gas, right? So if those things start to move higher further, if they continue to move up, then yeah, Gush can push higher. But if it continues to, if it starts to pull back, if there's any kind of de-escalation, then Gush will absolutely get crushed. The faster it went up, it's going to come back down just as quickly because it's going to be a volatile trade. So I'd be very, very careful if you're trading oil right now. Yeah, so JPM we covered 64% expecting SoFi inclusion in the S&P 500. 36% say no. Okay, let's take a look at Coinbase and then we'll talk about SoFi as well. So, all right, let's see. Coinbase, again, volatile, trading on the back of Bitcoin and Ether. recovered a little bit from 142, back down almost 4% pre-market. I would say a little bit of resistance up to as much as 212, 213, and support level is going to step down to 142, 143 for Coinbase. So non-farm data came out. Yes, we got the unemployment numbers. I broke it down earlier, but let me just open up my spreadsheet as well. Let's see, unemployment. This is where we are from the unemployment perspective. 6.5 million is the current job openings. Obviously less than how many people are actually unemployed, 7.5 million. This ratio is 0.86. Technically, the unemployment rate is at 4.5% because if you kind of round up a little bit, we're 4.45 or 4.5 basically. But of course, the reported number is 4.4 because we're at 4.45 if you go another decimal out. So that's where we are. And we lost 92,000 jobs in the month of February. So it was negative 92,000. Okay, let's take a look at VRT. Let's talk about that stock as well. So Vertiv Holdings down about 3% pre-market. Lots of consolidation sideways. Seems like we have done a lot of analysis on this, by the way. It's actually part of our 2026 watch list as well. But support level is going to step down to $200 to as much as 145. So those right there are going to be a couple support levels to watch. Right now, overbought. So pre-market, would not be surprised. Not surprised that it's down 3% and would not be surprised if it continues to pull back a little bit further. Yeah, Netflix is holding up pretty well pre-market, so that is good. Netflix is actually had a lot of accumulation as well, right? So Netflix went through a series of buying activity, from institutional investors, big money stepping in since November of last year. It's just been selling off, and there's been more and more buyers stepping in. And then more recently, we saw up until February 25th, still a lot of buyers stepping in, and it's obviously up over 34-35% since then, trading up to almost $100 at the moment. So I live in Sweden and I can't see the markets for like 25 minutes. Could you show me how the market looks like now? Yeah, I mean, markets are down. QQQs are down 1.6% pre-market. We got the S&P down over 1.3%. Tesla's down 1.7%. Nvidia's down 2.3%. Crude oil is up 11%, trading up to almost $88 a barrel. Volatility is higher, 17% on the day so far, trading up to 28. And if we are at 28, we're going to be looking at 90th percentile. Guys, we are going to hit 90th percentile most likely today if it trades above 28.5. So as soon as volatility gets up to over 28.5, in fact, I'm going to set up an alert here. We're going to be in the 90th percentile for the VIX. First time since April 2025. So first time since the tariff tantrums of last year. And by the way, Scott Besson also said that the 15% global tariffs go into effect starting as early as this weekend. So we might see some more tariff coming in. I mean, it's crazy. So much going on, and the focus is still very much on 15% tariffs. Like, bro. Prices are already going up. Can you look at Tesla, please? I might buy some more, so let's take a look. Can you do 1 minute commentary on the Indian market as well? I think Nifty has been dropping. It's down over 7% in the last like 5 days or something. As you can see that it was down to 1.2% today from all-time highs. As I said, it is down a little bit over 7.3%. I think it might enter into a correction soon. That's going to be sitting roughly at 24,000. I think for India, from a political standpoint, I think it's been pretty abstained, pretty neutral for a long time. I think AI is a much bigger risk than these geopolitical events. But it's still going to get affected by higher oil prices at the moment. I think that's still going to be a pretty big problem for India. But 24,322 is going to be that support. If we do break down, I could see the Nifty falling down to 23,000. I think that's going to be that next support to watch. I think a 10% correction is possible for Nifty. And as I said, AI is a bigger risk, in my opinion, for India. Okay, so where were we? We were going back to Tesla. So let's take a look at Tesla here. Pre-market back under 400 bucks, trading on a 398, still consolidating, still trading inside this downtrending channel. Lower highs and lower lows, and support level is going to stay up at 383 for Tesla. So this right here is going to be that level to watch, with the resistance all the way up to as much as 413, 414 for Tesla. But overall, still consolidating sideways, still trading in that range, moving up and down and all over the place right now. One-liner opinion on Dubai real estate market in the near midterm. Such a tough question. Look, overall things are normal. Day-to-day life is normal. I've been talking to people every single day. Probably like 6-7 people every day that I'm talking to. I'm watching a lot of content on like people that I trust, people that I follow. A day-to-day life, pretty normal. UAE's done an incredible job, and probably one of the best jobs out there in the world, intercepting 99% of whatever's been thrown at it. It's been the only country that's been hit the most, targeted the most from Iran, over 1,000 ballistic missiles and drones combined. I think UAE's done an incredible job. Like I said, I cannot praise them enough for what they've done and what they've accomplished in terms of safety and security. That being said, and as I said yesterday, the biggest damage is not the actual damage. It is more about the intangible, which you can't see, which is safety and the perception, the investor sentiment, the confidence. That, I think, is the bigger problem. How long this goes on for will dictate how long it takes for it to restore. If it wraps up within a week, it's still possible to restore investor confidence, for sentiment to come back in. But if it goes on for longer, that creates a different dynamic for real estate, not just in the UAE, but in the entire Gulf. So those are my thoughts out there. But even from a market perspective, I think transaction volumes have dropped. I have been tracking that as well. Buyers are not fearful of pulling out of contracts, losing 10% deposits. That's a risk worthwhile taking for them, as opposed to actually buying the property. So we have seen transaction volumes come down, but prices have been stable. Overall, I think investors there, the investor profile is quite different. So I think investors are not panic selling. There's not a state of panic from sellers at the moment, myself included. But as I said, the timeline, the duration, how this war evolves, all of those factors really matter for not just Dubai, but for the entire Gulf. So in 3 to 5 years, real estate based on stats, it would drop 5 to 10% if it really, but bounces back 25% because if it attracts more people. I agree. I think the supply demand factors will normalize over the long term. But yes, this is a short-term bump right now. Could convert into a medium term or long term, again, depends on duration, which nobody has the answer to this question, right? How long is this going to go on for? Can anybody tell me right now? Nobody can. So we just don't have the answer to that. So would you trade the VIX to the up or the downside in the short term? So volatility has a history of getting crushed to the downside, but you'll never be able to trade volatility well. Most volatility products are there, but they're very difficult to trade. And so I wouldn't trade volatility in general. I would trade, of course, individual stocks and indices. Would be looking at hedging my position on the downside, taking long positions when I do think the risk reward is worthwhile, tracking the money invest index, tracking volatility. And crude oil just hit over $88 a barrel. Again, so high for today, 88.24. Okay, so market's about to open in about 3 minutes here. Unemployment numbers are out. Where are we standing for the week? For the week of March, first week of March, we're down 70 basis points. That's not including for the pre-market move. So considering for the pre-market move, we're going to be down over 2%, close to 2%. And then coming over to the NASDAQ, so far this week, we're up 36 basis points, but we are down 1.5% pre-market. So I think today's move is really what's going to dictate how we close this week and for the first week of the month of March, how March is going to pretty much start. Thank you so much. I appreciate that. I was going to fly my plane with the profit that you made me to come rescue. Glad you're safe. Not the first comment. Micron losing momentum or taking a breather. So Micron and SanDisk, the memory stocks, have been on an absolute tear. I think it's about time that they start to kind of pull back a little bit, given how overbought they were. On a weekly time frame, we talked about this RSI over 72, trading at one point as much as 87. So it's not a surprise that we're seeing a little bit of a breather on Micron. So if that support gets taken out at 366, 367, so if this support level is no longer valid, then I do think that lower prices are possible on Micron, getting down to 288, 289. So sub $300 is possible if this support level gets taken out for Micron. Vol, thank you so much for reminding everyone. Make sure that you drop a like. I would really appreciate that. And Kevin, yes, volatility, crude oil, and economic activity. Very, very important. I think that's really what I'm watching, because a lot of, equities in general are reacting to what's happening on a global stage. And that's why we have to kind of look at what's happening in the big picture with oil, with insurance premiums, with overall activity in that region, because that's really what's going to dictate everything. It's like a domino effect, right? One thing affects the other, which then affects another thing. And so at the end of the day, like, markets are just trying to react to all of the pieces of information that's out there. So that's where we are at the moment. Yeah, the like reminder is always helpful. We quickly get wrapped up in the video content. I appreciate that. Yes, thank you so much. And the Money Vest Index closed at just over 3.2, 3.3 yesterday on the S&P 500, so 3.3. The NASDAQ was trading up to, I think, back over 3.03, I think is where we closed, 3.13. And then we also did hit the lowest level at 2.93 earlier in the week as well. And I would not be surprised if we actually see that today as well, given how high volatility is and the NASDAQ pulling back pre-market as well. Okay, here we go. Let's see what the market has in store to close the entire first week of March. And how high is volatility going to go? And how high is crude oil going to go? We are ready with this market open. So Tesla dropping 2%, trading down to 396, 397. I do still think that intraday buyers may step in, as they have in the past couple of weeks here. Any kind of red, any kind of pullbacks, we've seen buyers stepping in aggressively. So it is possible that we do see some buyers stepping in intraday, but do not fool yourself into believing that this is over. It's not over until it is. So thank you so much for joining, everyone. Really appreciate you all. Again, link's going to be down below if you're interested in joining our Discord, our MoneyVest community, our educational videos, website access, shopping list. Everything is going to be available with the link down below if you're interested in joining. Any questions, just email me at admin@moneyvest.com, and I'm more than happy to help. I will be considering some trades on SOXL and TQQQ, but need to pace ourselves because don't want to be caught holding the wrong trade, especially since it's leveraged. So thank you so much, everyone. Have a great weekend. Hoping and praying for de-escalation, for ceasefires, and hope you all are safe. And I'll see you all in the next video. Take care.